Good morning, everyone, and welcome to Morning Market Movers, where we do live analysis for day trading today and look at hotspots in the markets for today, Tuesday, April 19th. My name is Todd Rich. I am with Nadex. With me, Brian Caprice from Keep Trading Simple. We do have some things moving in the markets today. Yesterday, we had mentioned keep an eye on that yen. We were looking. The markets weren't reacting then, but looking for yen weakness. And in fact, we're getting quite a bit of that when we're seeing the yen showing weakness across the board today. We are going to look at technical levels there in different currency pairs with the yen, like the euro yen and the pound yen. What are we also seeing moving? Oil, as well as nat gas, seeing those energies down a little bit today. Which is a little interesting. We were talking about nat gas yesterday. Watch out to the upside. It did get above $8, which is crazy, and it's since backed off to where we were when we did the show yesterday. Yesterday morning, but we're seeing some volatility there in nat gas. Oil also a little bit weaker. We'll take a peek at equities as well because everyone's going to be talking about equities. It is earnings season. We were concerned about sellers coming in. Sellers did come in yesterday, but alas, in the last hour, buyers came in and left us pretty much flat on the day. This morning, we're looking to be opening slightly in the green, but we'll take a look at some of those equity charts and see what's in store for us for equities. So that's what we're going to be looking at today: yen, energy, namely oil and gas, and as well as the equity indices. Before I flip it over to Brian, I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone. That any trading decision you make your responsibility at your own risk. This is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. Curious what I was talking about with the yen. You can see how here's the pound. I mean, the pound is up, the yen is down because it's in the second position. This same chart for the euro yen, but we're going to jump there and take a look at technical levels. And it's what Japan wants. And I am going to encourage everyone, before I give it to Brian, I am going to drop a link in right now. We are going to be running through this quickly this morning, but today, in a few hours, 11 a.m. Central, noon Eastern, Brian's going to do a full-blown hour-long analysis of what's going on in all the markets. He'll have had an opportunity to digest how the open was, and he's going to be looking ahead for the rest of the week as well. So please, if you haven't registered, there's a link to register for today's webinar. We do this every Tuesday. I want to make sure everyone knows they can join that on Tuesday. We will be recording that as well if you can't join live. But if you register, you will get a link to the recording. All right, Brian, I'm going to flip it over to you, and let's go through some of these things this morning: the yen, energies, and equities.
Yeah, I mean, besides the yen story, there's really not a whole lot out there today. Again, we knew it was going to be low news. Just to review again, I have every country, every news event, and everything minus this no impact, even the low impact, which I don't normally put on here. And even then, it's really, really hard to find something today to really kind of highlight as far as economic news releases go. So they're just not there. Even in the hottest news, there's really not a whole lot going on. You know, Lavrov says Russia will only use conventional weapons in the Ukraine. That's great to hear. The fact that they have to say that is interesting. And again, they're being told that they're going to use nuclear weapons by the Ukraine. Let's hope it never comes to that because that could be really, really bad. Besides that, the only news that we actually have is out of Japan. And again, this has been a recurring story talking about it's weak, it's weak, it's weak, it's weak, it's weak, it's weak. If you look at some of these stories, they finally, I love the pictures. I don't think if I make this any bigger, you can see the picture any better. Or maybe you can. I love the pictures. Best site ever for pictures. He's looking at his watch like, listen, I told you it's weak. Make it go weak. And again, now I got to shrink it back down. It finally went weak. I mean, it doesn't matter which one we look at. Dollar yen, I think, is the one that really kind of is that matters the most right now. You can see really it's like finally like, okay, caught up. I mean, we've still been grinding. We've still been going higher. Remember, the number that they've kind of telegraphed as being the major problem right now is not necessarily a problem, but like where they'll do something is 130. And right now we're 128.35. Yesterday was a nice push up. It's currently up 184. The daily ATR right now, with some of the swings they've had, is actually 108. So with that, I mean, we were a day and a half away from hitting that 130. Um, it's important to watch out for. The bank, they've already said, the BOJ has already said 130 is a number where if we need to, we can raise interest rates. So they've kind of telegraphed what's going to happen when we get there. Why I think that's important is, again, I don't know if we're going to hit today, tomorrow, but the reality is we get hit in the next few days. There could be some great opportunity there because we already know kind of what the central bank plans to do if it hits that number, because that's when it starts to hurt their economy. There could be some ways to set that up with whether it be call spreads or even knockouts in there, or even some binaries when we get up in that 130 time frame. We know that they're going to intervene. They've said it. If we get up there, we're going to intervene. And one of the things that we can do is we can raise interest rates. They haven't done that for a long time, but
No.
they're,
When
they're,
was the
they're kind of
last time?
telegraphing it.
It's been
Yeah.
decades.
Yeah, and he's watching his watch. He's like, come on, let's go. So it is interesting. So it's a scenario that we don't see too often, but, we're getting to that stage. And again, now the dollar yen up 183, pound yen 202. Everything else is basically just flat right now. Nothing else is moving. And that's it really for news. I mean, there's nothing really out there. Besides that yen story, the VIX yesterday we mentioned, it gapped over the weekend, which again, you expect, right? But there was really no news, no headlines. We watched the VIX deteriorate, and it was an interesting day in the markets. They basically ended flat. I can tell you, I was in the car actually when the market was closing, and it's funny they're talking about this end of the day rally. Like, man, we've moved up substantially at the end of the day, but for the most part, they all kind of ended up flat. And now they're all pretty much flat. They're, I would say, overall, I mean, three are red, but like the Dow right now is minus 0.01%. That could be like rounding of why it's red. ES is 0.05, down. NQ is minus 0.1%, 0.09, right? Russell is 0.09. So there was some good opportunities out there with it. We talked about this 50%, and again, let's drop this down to 15%. Even in a market that really did nothing, you can see there was quite a bit of chop back and forth again. The reason I have it highlighted is because we talked about 4,400 yesterday being a big psychological number. We knew we had the 50% retracement right there, so fib traders are going to be in. The first thing we always talk about is that 1030 reversal. 1030 is right there. Okay, if you guys see where it is, it didn't hit the 50% retracement level, but we were sitting there, we were running into sellers, we were basing. So this is one of those scenarios where great level for fibs to confirm, but at the end of the day, if you look back, price action was what controlled it. You can see an easy 1 to 3. Then we finally came up, and at about 2 o'clock in the afternoon, after lunch was over, we finally hit the 50% fib, and you can see it went all the way down to the full profit target a second time. So 2 different short opportunities there before the end of the day, and then just kind of there was this end of the day rally that started here and just shot up, and then the market ended in. Now we're a little bit lower. So I think rolling it in today, again, I would be looking for lower levels down here as far as like bouncing opportunity. There's some buyers in a couple different places. Can we take that fib level again? I'd be a little bit cautious with it because sellers stepped in here, went higher, stepped in again, stepped in again. So they've stepped in a whole lot of times. If anything, on the top side, I'd probably be watching more of this level up here, which is kind of hiding above the 60, right above the 61.8, 44.21.
What is that? The three tests. The fourth one. Is the one.
Oh, this is much more. Yeah,
and that's done it so many more times. That how many more times can it test that level before it punches through?
Yeah. And it's what's interesting too is we talk about reversal times. U.S. reversal time is 10:30. European is 5:30. Well, here it's 5:30 in the morning. Right there. So we talk about when reversals occur. So today, if anything, the way that they're all starting to roll into the red right now, I'd actually be looking for another reversal again. And unfortunately, we don't really have any headlines or anything that can really. The IMF, they can say something, I guess, but besides that, we really don't have much. So it's going to be a purely technical day. So right now, to get them on a 15-minute chart, we're kind of smack in the middle between sellers and buyers right now. At this point, I'd say if we can continue with this negativity, jump down, and again, maybe be looking as the time is what our trigger is going to be. If we can come down, we know we have buyers here. We, again, been tested, right? They've stepped in. It hasn't pierced very deeply in. So I would say that if we can kind of time this 43.61 with, a 10:30 time frame, which would be here, right there, maybe we can get some type of a bounce off of it. But besides that, there's not really any type of catalyst out there that are really telling us where market's going to go right now. It's kind of smack in the middle. NQ kind of the same thing. You can see that NQ came up. We had the zone a little bit above. You can see that it came up and actually tagged the 14,000 number. Didn't hit our zone. Didn't hit the 50. It tagged 14,000 at 10:30, and that's exactly where the reversal occurred here. And the same thing, 5:15. Actually, the 5:30 candle is right there. Okay, so almost pegged this one right to the bottom as well. Kind of the same scenario. I would probably mark off this lower level and say, hey, listen, we know we got buyers down here. It's been confirmed. It's got a lot of room to run, but right now this one is kind of bracketed on both sides, and we're kind of sitting right in the middle. So it's not an ideal trade opportunity. We do have 30 minutes before the open. Maybe it pulls back down and finds that same area where the European traders stepped in. That's about as close as an area we have right now for any type of NQ movement. The zone is okay. I would say the zone's all right. I'm not, it's not the best zone on the board right now, but it's the only one we got that's even remotely close right now, and that would be somewhat of a long at the open. YM, kind of the same story, right? How's this one? All out of whack.
I mean, they're all very much range bound,
Yeah.
going from a slightly wider range to a slightly narrower range, as everyone just we're waiting. So sorry, go on.
Yeah. And again, YM completely sideways. Like I said, range bound in there. I would say look for a break of this level down below. Again, we've pierced into it. I'm not sure why that one's marked. My YM chart is all messed up. It's kind of weird. I don't know what's going on with YM chart today. Anyway, it's an area. Again, it's close with everything turning red right now. At least it gives us an opportunity to say, hey, listen, there were buyers down here before. If we can kind of grind down at that open and not break this zone, that could be a launching point as well. And again, VIX is higher, but there's not really anything really to justify the VIX being up there right now. And again, when U.S. sessions opens, there's no news to really jack it up either. So could be the opportunity for us to go long. And again, it could be in just another back and forth day. And Russell, kind of the same thing. Yesterday we were talking about, finding entries into this. You can see it basically just chopped sideways. Same thing. Fibs really didn't do much for us. And really, there's even in this, it's literally just sideways. We're kind of in this area. So major triggers are obviously going to be 1978 in this one. Again, this is all an interest rate discussion, and we didn't really hear much yesterday about it. There was a little bit midday where they were talking about, basically with interest rates rising, is that going to put us in a recession, close to a recession? It has the market already factored in. Is it going to be a non-factor when we raise interest rates? A lot of questions yesterday. They were posing. At least whenever I was in the car, that's all CNBC talked about yesterday was how close to a recession. Are we going to a recession? And really, if the market, we raise interest rates 0.5, is that a guaranteed recipe for the market to go down, or is it already factored in? Will it really hurt it at all?
And there's a debate there. I mean, to me, they've kind of broadcast it. We've already seen interest rates. I mean, interest rates are going higher. Bonds, bonds are down, yields are up. So a shift in the interest has it already been priced into the market? And I'm kind of wondering if it already has, if the shoe's already dropped.
Yeah, I mean, maybe. It's really hard to say. I mean, I think the biggest concerns later on is what is it really going to do to borrowing costs? Because, like I said, we don't have a deflationary period. Prices are going to stay high. Where prices are right now, when 75% of the population has changed their spending habits already, it can't stay where it is. We almost need like a deflationary period right now to reset prices back to where they were a year ago. That's kind of, for that to happen, the markets will have to crash. So it's a very interesting scenario. I mean, it's like a chess game. There's so many different ways that it plays out. Oil, we got a little bit of relief in oil. When I say a little bit of relief, I don't want to say that, I don't want to make it seem like there's, I mean, we're still at 103.72. From where we were yesterday, let's see, yesterday at 9, we were kind of forming that top, and I said that it wasn't a bad area. Did I think it was going to be a screamer down? No. I still think 105 is kind of the area that we're looking for, but we do at least have inventory reports coming out tonight. Remember, last week it was 9 million surplus. If this week comes in like 18 million surplus and the price stays at 103, the real question is be like, well, wait a second, he keeps releasing all this oil. Why is it there? And again, this was talked about yesterday too. On one of the other car, I was in the car a lot yesterday. In one of my other car rides, they were talking about this, that doesn't matter how much we really, demand will stay consistent. It doesn't matter what happens. The more as we roll out of the pandemic, demand globally will remain. There's nothing that's going to kill that demand. So where oil is right now, the United States can release more, but until we release it and ship it overseas and try to replace the Middle East, the demand will exist. And as more people recover, again, think about it right now. If we're at 103 right now, we have a surplus. China right now, China is locked down. When China comes out of lockdown, the global demand for oil will go higher. Is the U.S.'s 9 million surplus going to supply the whole globe? Is it going to supply China? Not even close. So again, I think it's one of those things. It's kind of like, I'd love to say go down, but it's not that scenario. And natural gas, we did get some relief in natural gas, but the relief is after it tagged $8. So the $8 threshold has now been hit. It has pulled back 60 cents, which is awesome, right? I'm almost looking at this 8 and thinking, hey, listen, this is like when oil broke 100 for the first time. Everybody
Yeah.
wanted to brag about, I'm the guy that bought oil at 100 the first time, right? So it's great that it is pulled back, but again, there's too many candles in that one. Are we done right now? We talked about 734. This was a level of the gap. Well, we tagged the gap and we started the rally back off the gap again. So really, the big question for me on this one is if you draw some quick fibs on this one, you can see that we already came up to the 23.6. Is that where are we going to reverse? Are we going to break this level now, or we go just a little bit higher maybe into this level? I still think this is you're playing with a firecracker with a wet fuse. Could it go off? Yeah. Could it not go off? It could. But I think
Yeah.
we're 1 week or 2 weeks from Russia basically saying, "Oh, you want the gas shut off? Okay, we'll shut all the gas. We won't ship any more gas."
Yeah.
Um, and militarily, it hasn't gone their way, but at the end of the day, they don't have to shoot a nuke. They can just literally turn gas off, and Europe is going to be in extreme panic. Germany already has a plan for rationing energy. I mean, just the basic needs of things. So we got food shortages. We have energy. I mean, the EU is not in a great position if Russia decides just to say, "Oh, you want to play game? Okay, we'll just shut it off." So
Yeah.
that's where we're at. And then finally, a little bit of relief in gold and silver. They're exactly both 0.7 down, so they're still trying to find kind of where they're at. But again, you're seeing major collapse in gold, major collapse in silver right now. And again, what news do we have? Not really much, right? Unless
No,
anything has been passed. No, the guy that
nothing.
got his birthday party got $450,000. That's it. So
You know,
yeah,
that's the big headline.
that's the hottest news out. That's why gold is crashing because this guy didn't want a birthday party. His office threw him one, and he had a panic attack because of his parents as a child, and he got $450,000. So, yep, that's it. That's why gold's
All
dropping.
right.
So,
Yep.
so that's it. Nothing really today. Like I said, come back at noon, and hopefully we got some more to work with at
There we
that
go.
point.
I did put the link in, so we'll get the open. I know we've got some more earnings reports. I know Johnson and Johnson released earnings. They had a I think they had a earnings hit and or a revenue hit and an earnings miss. I can't remember. It was something like that. It was a mixed result. We've got more of these. I mean, it's earnings week. I know Netflix is coming out. I know IBM is coming out. IBM.
Yeah,
So
a lot of people are looking at Netflix right now. There was a lot of talk about how Netflix is going to be an important one since that's kind of the new model of streaming. So,
yeah, and
particularly overseas.
they're expecting a dip in new subscribers. So
Mhm.
uh, yeah, I mean, earnings season could. I mean, that's what we're thinking could potentially move some of these markets and shake them out of these zones. So,
Mhm.
with that, any questions for Nadex? Please email us customer service at nadex.com. Brian is accessible. Please feel free to email Brian at support@keeptradingsimple.com. You can also email me todd.rich@nadex.com. I'd love to hear what you think of what we're doing. Any ideas on what else you'd like to see, uh, more of, less of. We're always open to ideas. We're here to help. The only way we could do that, though, if you've got a concern or a question, please email us. And really, it is a bit of a quiet morning again. It's just a quiet week here in spring, although you wouldn't know it because it's still freezing outside. But we got that yen weakness we were waiting for. Well, we saw it, waiting to see if, depending upon how far out of whack that gets before Japan decides to do anything. But they like that weakness in the yen. Oil and gas each backing off a little bit. Equities just sort of mixed, and we're waiting to see how the earnings numbers come out. With that, please register for the webinar. It's in 3 hours. Hopefully you can join us. If you can't, uh, register. You'll get a copy of the recording. Otherwise, Brian and I will be back tomorrow morning until either one of those times. Good luck in the markets, everyone. Thank you for joining us. We will catch you later.